We sent out our chart on Friday for the stocks going ex-div next week.
Top 10 stocks.
I know that a lot of people aren't keen to invest in a market such as this, but this is the market where you get deals. You have to get over that fear, because when you get the best deals is when everyone else is panic selling, so you need to get over that. And I found 10 good ones here. Got Glad, you see it there. That's a really good one. Main Street Capital is still a little bit overvalued, but like compared to its peers, it's not overvalued, but compared to itself, it is. So I would be worried about that one. But you see the profit margin in Glad, that's really good. That means that this yield shouldn't be cut ever. Like it should only go, or I'm sorry, the dividend should never be cut. This yield might go down as the price goes up for this, but that's a really good profit margin. This is net profit margin. That means after they take out like their debt and their one-time payments and everything. Here's another financial one, OFS, One Financial. It has really good numbers as well with a pretty good yield. And we actually hold this Fisker one. This is one that they talk about a lot. This is a really, really good one.
Fisker Capital.
It's really well ran. And we also hold AFG. This one here is tricky because its base dividend is, I want to say 70 cents, but this is a special dividend. They pay out like one or two of these a year. So this yield doesn't include this generally whenever you look it up. I mean, you can put it in if you want to. I just do what's easiest because this chart takes forever to put together. But that's a pretty good special dividend for a stock that's pretty good. And this one down here is a Canadian one. The reason it's on the bottom is because I'm not sure what the tariff policies and the conversion rate's going to do to this 41 cents. It might be along the lines of 36 cents a share after you convert the currency. But this one's a BDC. This one's a BDC, 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 and that one's a BDC. So we have BDCs everywhere. Look at all these BDCs. 1, 2, 3, 4, 5, 6, 7, 8 of our 10 are BDCs, which makes me think that perhaps the financial market is one of the undervalued sectors right now to start putting money into, because
Oh, and guess how long we've been talking about getting into BDCs?
it's been like a year and a half at least.
When we were talking about positioning for the upcoming...
I understand, like, there's the probability is that the market's still going to go down. So your principal is still going to go down, but if you start positioning yourself into something now, when the market turns around and goes up, I mean, BDCs are different than normal stocks because BDCs are dependent on interest rates. But the interest rates will come down at some point. So if you start positioning yourself now, you're going to get more shares because, like, a lot of these are monthly dividend payers. You're going to get additional shares each month that while you're waiting for the market to turn around, the interest rates to come down. So you're actually making it for a better return down the line, even though it's a scary time to invest. But that's my opinion.